back to the Hub channel. My name is Brandon, and we have another amazing show for you here today. Every Monday, obviously, we get together with Jeff Beamer, who is a professional money manager, senior strategist over at Evo Trader. Jeff always has some good insight for us, but on today's show, we're going to be covering his last trade, see how that did. We're going to be going over the top headlines, a market update, and obviously we're going to be looking ahead to see what Jeff is looking at and the trade that he's going to hop into this week. Jeff, get on in here. Jeff is our Heikinashi guy. Every single week, he teaches me just a little bit more about those candles, and the pictures that he paints are so good. Jeff, how are you doing? How was your week? Oh my gosh, how was your last trade? That's what we really want to get at right out of the gate here.
Well, actually, there's a lot going on in the markets, as we're going to talk about in just a moment. But let's focus on last week's trade real quick. That was on Dollar General Corporation. And as traders, we all have decisions to make on, especially option traders, which that's what we do here, is trade a lot of options. We have to determine time and price. And I think on Dollar General, we just got the timing a little bit incorrect. I went a little short on the timing window, so I had to exit the trade last week. And it probably, I should have extended 1 week so I could stay in it for a few extra days. So we lost a little bit of money on that earnings announcement. The stock did not break out like it normally does, either up or down, on some comments by the CEO who said, well, he just put a damper on any breakout opportunities. I mean, he just really downplayed the results, said they weren't very good in his book, and on and on and on. And so one thing I want to do is, let me go ahead and I want to show my chart real quick, and I'm going to pull up Dollar General. We're going to talk about broader markets here in a moment, but let me just pull up Dollar General real quick. And I want you to see what's going on today, okay? So the stock is down, making new lows today, okay? You can see the earnings event last Thursday, and then we've had two just heavy follow-through days to the downside, okay? Now, you know, if we were able to stay in that trade, we would be actually pretty close to a profit right now. So again, it was just a timing thing. And, you know, that's one of the challenges of being an option trader. But let me just show you some of the crazy stuff that was discussed during that earnings announcement. Now, these are the analysts. Now, realize you just saw the price chart. You saw the one-day volatility and the current price today, just a few minutes ago. Dollar General was trading at 124.5, okay? Now, on the day of the earnings, so last week, last Thursday, when the stock was trading just a little bit higher. So first of all, Piper Sandler raised Dollar General price target to 127 from 114. Well, we blew through 127 on the way down to 114, but that's not what they meant. It always confuses me when these analysts raise estimates to below where the stock is currently trading. Truist came out, raised the target from $1.16 to $116 to $117. Okay, we're way above that. Are you saying we're going to drop to that level? No, it says maintain hold rating. Okay, hold rating. So I guess they're thinking it's going to drop down to 117. No, I think they're going to ring their bell and say, oh, it already hit our target. But you can see these others. Deutsche Bank raises from 133 to 148, maintains buy. Jefferies adjusts. Dollar General from 135 to 155. Okay, so I got analysts saying, okay, it's going to go anywhere from 148 to 155. Oh no, but Loop Capital comes out and says, no, it's going to 135, which it just blew through on its way down to wherever it's going. And then we have the big boy Goldman Sachs saying, no, it's going to go to 147. And then Citigroup says, no, it's going to 138. And on and on. The big one here is Evercore adjusting to 170 from 210. So they lowered their estimates, but maintains a buy rating. Now, quite honestly, I looked and looked. There were no there were no sell ratings on this stock, which I find very interesting. Not that Dollar General is going to drop to new lows or anything, but the past 3 days has shown that this stock is really under some pressure, even though they had very nice earnings, raised estimates, and the CEO, all he did was poo-poo all over the just the current temperature of what's happening at Dollar General. So pretty crazy. Again, a slight miscalculation on the duration. Should have gone out probably 1 to 2 more weeks on this, but we didn't. But we won't make that mistake again. So let's move on.
It is what it is, Jeff. But hey, I just want to chime in here because I know that when you're showing all those graphics that you had there from all those different people talking, I see that all the time in multiple different markets. Just like even just a specific stock, just like this one, I will see the same exact type of scenario play out all the time, and so that's why nobody can win every time when they're trading or be able to call things perfectly, is because there's so much differing opinions back to back given the same data set. And so it gets silly.
It wasn't as dramatic here with Dollar General, but years ago, I had a position in U.S. Steel. The symbol is just X, okay? And I received a buy, sell, and reaffirm hold rating from 3 different analysts within 10 minutes of each other. So one company is saying buy it, one company is saying sell it, and another company is saying hold it, all within 3 minutes. This is what drives us to technical analysis. I mean,
exactly. You just got to block out the noise, and sometimes the media will try to sway their own narrative based on whatever their agenda is. So that's why you always got to block it out and just read the chart, you know?
Right.
We're on the same page here. So,
but we got a big week coming up. You know, we got some headlines here. So there's a lot of economic stuff going on this week. We begin with FOMC meeting that begins tomorrow. The announcement comes out Wednesday. Now, ironically, earlier this year, they were looking at this date, meaning this week, as another opportunity for Fed to raise rates. And I think that's been taken off the table. All right. I don't anticipate a cut. I think we're just going to stay right where we are. That's the bet in the markets. So we'll be watching that on Wednesday. I would anticipate markets to either be quiet or trickle higher until then. Okay, but that's on Wednesday. And then we have Triple Witching Friday. Okay, and this is where stock, index, and index futures all expire at the same time. This usually creates a lot of volume in the options markets because of what we call rollover, okay, especially in the indexes and in the futures as we roll from the December contracts out to March as the next quarterly target, okay? So we'll be focused on March futures. Yes, there's January and February, but those cycles expire in March, all right? So triple witching on Friday does cause a lot of volume, maybe not any real movement, but just a lot of volume. So don't be surprised if volume on Friday is larger than usual. And not only that, but we have S&P 500 rebalancing on Friday, okay, as this is a process where as stocks become either they gain value or they lose value, at some point, if you're having a kind of a balanced portfolio, or as far as weighting goes, you need to make adjustments. You either need to sell shares or buy shares. And also in the process is the addition and deletion of certain stocks. Okay, I think Uber is possibly, I haven't seen what the latest news was, but earlier it was rumored that Uber might be joining the S&P 500. We'll see about that. I don't remember what the final decision was on that, but that's what's going to happen all on Friday. So there's a lot going on. And to think that Christmas is just 2 weeks away. I mean, it's like, wow.
It's just like nothing stops, you know. When do we get a break? You know, it used to be back in back in my day, back in like 1937, when we get Christmas coming up, things would slow down in the markets, but not anymore. It's like 2023, we'll give you Christmas Day off. That's it. This is
Yeah,
funny.
not anymore. Yeah, with electronic trading and
Yeah.
all the addition to technology, it's fun constantly. It's so. Um, but let's look at the charts and start talking about markets a little bit, and then we'll get into our featured trade here. S&P 500 breaking out. Okay, we were up at some resistance, and we got our breakout on Friday, and today it has been confirmed, breaking out to new highs. I think this is going to probably take us up to our next target. Let me bring that in here. I've got a target of around 480 on the S&P 500, and I think my end of the year target, which I published on the Hub platform, was between 480 and 485. I might even put 485 out there as an end of the year. I'm not sure we're going to make it, but we could definitely make 470 to 475. But the ultimate target is up here at 480. Now, where that comes from, if I bring in more data here, is that pivot high back here. Look at that, December 31st of 2021. Okay, December 31st of 2021. So a year ago, essentially, it was 2 years ago was the high there, and then we've spent all that time, climbing back up. Okay, big drawdown, and then finally a rally. So what I look at, and Brandon mentioned it a little while ago, I like to get my confirmation from a hike in a sheet candle. This smooths out the trends and indicates that when a trend is either at an end or it's beginning again. And we can really see here that really Friday was a confirmation day on a hike in a sheet candle. And then today we have the follow through. Now the NASDAQ and the Qs, they're also confirming this. Okay, you can see the hike in the sheet candles here, just big green bars, no wicks on the bottom. We are breaking out to new highs on the Qs. So big rally there as we start marching higher. Now, target here is probably around 400 is the big round number on this. That would be my first target. And then followed by obviously 410 if this rally holds. But 400, we're at 393 already. That 400 is going to be kind of like a magnet and drawing price up to it. I wouldn't be surprised if we hit that relatively soon. That is on NASDAQ. IWM, the small caps, they're struggling. Let me clean up this chart just a little bit. This is also confirmed moving higher. But if I put on the regular candles once again, you can see that we are just kind of inching up. Okay, this is where if you were looking at regular candles, you might be kind of questioning, oh, can we get above this, this little area of minor resistance here? That's why I like using the hike in the sheet candles, because it kind of confirms, hey, this is a bullish trend or this is a bearish trend. All right, so that's what's been happening on really the broader markets. Now, energy has been interesting. If I look at USO, this has come down to some pretty significant support here. And what I'll do is I'll bring on my moving averages here, and for a reason. And I had another chart here. Let's see here. Okay, so we got this cross last week, and boy, did that look like trouble. Okay, on USO. However, if we put on here a little horizontal action and look, we see that this stock, and let me just color that up for you a little bit so you can see that line. All right. When we look at this area of support, you can see where it closed last week. there is a lot of support here, okay? A lot of support in this area here, and we have bounced off of it. But I noticed, I've talked about this before. One way to kind of track gas prices in general is just to follow prices at your local gas station. I noticed we were having some sticky prices, but since that about 2 weeks ago, we've come off those sticky prices about 15 cents. We've dropped about in my area, and hopefully in your area as well. We've had prices continue to come down as really demand has fallen off. It's really interesting to see, but we are bouncing off of support here on USO, and crude oil continues to show its weakness. Now, moving over to the metals real quick, we'll start with GLD. Boy, it made a big break out of this downtrend. And look at this. If I zoom in on this a little bit, you can see that we tested the bottom of this channel for 3 days. And did it give us any chance of getting in before gapping down on Friday and gapping down again today? No, it did not. This is a pretty steep move on the metals, specifically gold, okay, down over 1% today, but also silver, just absolutely, silver was a little better chance. We got a confirmation candle on Tuesday the 5th that this was going to make a bearish move, and boy, did it drop. And, typically we drop faster than we run up. But boy, this just did not give really much of a chance to try to catch it unless you anticipated something really early as the stock was going up, and probably took a little heat as SLV just kept running up. Same on gold. Okay, if you shorted up into that rally, you probably took some heat before finally getting relief as these two instruments are dropping. Now, bonds have been really interesting because we have come to a place where let's see if I can get my long-term moving average. So we came and bumped our head. Okay, this long-term moving average here is the 161 period moving average. Okay, I'm probably one of the few analysts, technical analysts that uses a 161 instead of a 150, but you can see why. There's many stocks that respect that. And look at this, GLD bumped its head, closed right on that 161. That's not a freakish type of occurrence. This happens all the time. All right, and we have fallen off of this a little bit. We still remain within this uptrend here. Okay, but all this means is that interest rates kind of came up a little bit. They moved back a little higher. Now, this is the long end of the curve. This is the 20-year plus treasury. If we look at the interest rate kind of associated with the long end of the curve, you're going to see just the opposite. You're going to see this, moving down, but look at this. Just like in the bonds, look at the long-term moving average coming up here, providing support on interest rates. Again, we're looking at interest rates here on TNX, okay? And we bounced right off of it and are going to rally higher. Now, what you can do here is, like we did on TLT, is draw a little trend channel. If it pierces that channel, what I would do is do a little Fibonacci retracement action to get my fib levels. And what I mean by that is just taking, I use closes, so taking the closing high and then the closing low, and setting these numbers here. And let me bring that down just a little bit here. Okay, we could rally up to that first target. It would be about 44.33 or so. That's that 38% retracement. 50% retracement is right at 45.5. All right, so we could see maybe a little rally there in interest rates, but right now, man, that long term is showing, well, medium term, I should say, is showing some weakness in interest rates We're still in that downtrend for now. I'm just anticipating a possible short-term move, and that's where that's kind of where that would come from. And then finally, we'll kind of take a look at the short end of the curve, SHY. We are right at some support on that long-term moving average. Again, these are the 1 to 3 year Treasury bonds, the average of them. Okay, so as a group, the average is, you can see that they're moving higher, and they're just testing right now that short-term moving average, which is my 21 period moving average. And look at that, bounced right off of it today, and it had rallied back up. All right, so this is all part of just analyzing markets, just maintaining. Interest rates have been so important here. The short end of the curve is still paying more than the long end. That is backwardation. That's an inverted yield curve. That's a problem. It remains a problem. I've heard some speak about uninverting the yield curve in the first quarter of next year. We'll see if that plays out. Meanwhile, we'll continue to monitor them. But I have what I call a chart of the day. I'll call it the chart of the day, and it's really what's happened to mortgage rates. Brandon, if we haven't really talked about mortgage rates here in a couple of weeks, so I wanted to bring up this chart and show what's happened to mortgage rates. We have fallen 100 basis points in 6 weeks. Now, if you understand something about rates and about bonds, that a move of 100 basis points in 6 weeks is a huge move. That is a incredible move in the bond market. We just don't move like that typically. Okay.
Is this good? Is this good or bad, Jeff? What are we talking here?
Obviously, it's giving some relief to home buyers, right? Again, these are averages. And this is the average of a 30-year fixed rate. We've bounced off of 7%. And we could see rates continue to drop. That means bonds continue to rise in value. That is what's happening. You saw that in TLT and in SHY. Okay, although we've come off the highs a little bit, we're still in those bullish patterns. So we could see interest rates hopefully get below 7 in the next couple of weeks. We will review this in a couple of weeks. This isn't, we could look at it every day, but it gets a little boring. But keeping an eye on this. This move of 100 basis points drop in 6 weeks is what made it the chart of the day. I mean, it's just like, wow, what an incredible move. So yeah,
I think really this could be. Yeah, this could turn out good. I mean, so many people have been holding off listing their houses and creating the supply shock in the market. This could be good. Eventually, I think people will start listing their houses if they know they can replace their home for a little bit better interest rate, and so that might help with that supply. And who knows, it might loosen up some of the cogs that are stuck right now. So, right. I don't know, Jeff. We'll see how this thing plays out into next year and early as it continues to drop. But what are you looking for going forward? I mean, we got earnings coming up, and then what trade are you looking at right now?
Well, let's talk about that for just a moment. We do have some earnings this week. In fact, here we're about 35 minutes before market close today. After market close, we have there's actually I calculated it out. We have approximately 394 earnings announcements this month in December. 394. That's still quite a few. It's a big number that you don't really think about because it's not earning season when a majority of stocks. But these are some name brand companies. So today, after market close, the big name there is Oracle. Okay, and then pre-market opened tomorrow. We have Johnson Controls, which is interesting. But then Wednesday, obviously, we have the Fed announcement, we have FOMC, the press conference, but then after market, we have Adobe making their announcement, and then Thursday, the two that catch my attention are Costco and Lennar. Okay, so Lennar being a home builder, and Costco obviously being consumer. related. We want to keep an eye on them. And then Friday morning, we have Darden. Okay, so a moderately busy week for being, in the middle of December. But because we're getting kind of light on big notable names, having these earnings announcements, I often like this time of year to take advantage of time decay. You often hear that options lose their value over time, and they absolutely do. And so a big part of our trading is on capturing time decay, also called theta decay. All right, we like to capture time, and there's a variety of strategies where we sell premium to capture that time decay. Okay, and so what I'm looking at this week is a stock that is in between its earnings announcement, yet its implied volatility is still showing some opportunity to capture some nice premium, and that happens to be on Comcast. All right, so Comcast is is the stock that I'm looking at this week, and it will. We're looking for a sideways action. Okay, now believe it or not, sideways action on a stock occurs almost 70% of the time. Okay. We have done many firms have done research on this. We just conducted another study of over 4,000 stocks, and I think the number was 67% of the time stocks trend sideways. Okay, and so what I'm looking for here on Comcast is, you can see after its earnings announcement a little volatility, and the stock dropped pretty hard, but then immediately rallied back up to this price area of around between $40 and $43. Well, if this pattern continues for a little bit, we can actually capture a very nice little trade here. This is called a calendar spread. And I can just see from my modeling here of buying an option and selling a nearer term option, this is going to cost me, believe it or not, only 19 cents, okay, meaning $19 in options language, okay, 19 cents, but has the ability of making a maximum profit of $48. And that's that point that you see out there on the right, okay? So that is the potential for a 250% return over the period. And I'll tell you what the period is. The period is 18 days, okay, is when this trade would expire, well, at least when the short option expires. And I have the potential to make upwards of 250% over that time. Now, usually we don't target that whole amount. There's a little strategy to it. But by, through our delta neutral income service, we show how to manage these trades, how to get into them, how to get out of them, and generate income over a very short period of time. So that is what we're looking at this week, is not necessarily a breakout because of earnings. Okay, doesn't mean these stocks that we listed this week won't move. It's just they don't meet our stringent criteria for moving double digits or more. Okay, so what I'm looking at now is maybe something that has a little higher implied volatility in the options, but is already past its earnings period and looks like it's going to trade sideways here for a couple of weeks. So not only that, Brandon, but we have, like after today, obviously we have 4 days left in the trading week, and then we have 2 days off because of the weekend. That is theta decay. That occurs every day, no matter if it's a weekday or a weekend. Okay. And then we have another week, and then we have 3 days off. Okay. So, we have some time here. This is a perfect time of year to do this type of strategy, Brandon, and it can make you a lot of money when the markets get a little quiet through the holidays.
Yeah, I mean, I always liked Theta Decay as long as it's working in my favor. I loved that part of it because Theta Decay is
Right.
basically going right in your pocket, right, Jeff? That's the kind of stuff that
Right.
goes right in your pocket if you're on the right side of the trade.
That's
And
right.
you're
That's
not
right.
wrong. This is the time of year for that because everybody's going to be coasting, hopefully. So you did mention and you did allude to where people could find out more about what you do. Where's that exactly again? I don't know if we put that on the screen yet.
Well, we often talk, we like focusing on earnings. It's a great time. We do this type of trade that you're looking at can be done through an earnings announcement. There's actually a different type of strategy that we would do through an earnings announcement on a quieter stock, but we also focus on the stocks that move big. And we've been featuring that here for a couple of weeks. I want to go ahead and feature it here again today. And that is our guide on how we trade through earnings. Okay. And that's available at ewotrader.com/straddle. Okay. And that will take you right to a page to where you can register for the download and get this free guide. I think, man, if I don't recall, it's like 19 pages long. I mean, it's, there's some good content in there. And you can learn more through downloading our guide. So Brandon, yeah, I like trading breakouts because it's a very exciting, but I also like having these Theta Decay type of trades on where they just every day we're just making a little money every day as that stock just remains trading in a sideways range.
I love that. Thanks so much, Jeff. Also, thank you for coming on the channel today again, going over your past trade and going over what you see coming up in the market. As always, we value your input and your strategies. I think they work really well for a lot of people here. And if you guys have any comments or if you guys want to leave Jeff a question, go ahead and put that in the comments section below. But as of now, we will see you next week when we have Jeff come back to talk about his trade and what else is going on in the market. I think there's going to still be a lot happening, even though, like Jeff said, we're getting closer and closer to Christmas. That doesn't mean people have stopped trading. But we will see you guys in the next one. Take it easy.
Now, last hour trading, 3 p.m. Eastern, 2 p.m. Central. We're coming to you live. So I'm looking forward to that.
That's right. That's right. Thank you, guys. We'll see you in the next one.